Thanks for taking my question. I wanted to follow up a little bit. I understand what you're saying about the dot plot and the message you're trying to send with the dot plot, but does the same apply for the taper tantrum? You've said that it's going to take some time to get some fundamental progress on your goals, but it seems like some time could now be any time.
Well, so we've said substantial further progress. Now, if you go back November, December, and January, progress in the labor market slowed very sharply. So you had an average of 29,000 jobs per month. If you go back and look at the level of job creation before that was very, very high, very high. So we weren't making any progress on the labor market from November through January. February, we saw a nice pickup, a good jobs report, 379,465 private sector. So that's good. It can go so much higher, though, and you know, it would be nice to see to really make faster progress. That's different from substantial progress. We'd like to see it be higher than that, and I think it will be. That's the expectation. Is you'll see now, I think, really strong job creation return, not as high as it was in the very early days of the recovery, the reopening of the economy, but nonetheless very strong. Okay, so what I'm saying is, to achieve substantial progress from where we are, having had 3 months of very little progress, it's going to take some time. And we don't want to get into, I don't want to get into trying to put a pin on the calendar someplace, because it's going to be data dependent. When we see ourselves on track to make substantial further progress, we're going to say so. We understand fully that test is one that involves judgment. If you remember, during the global financial crisis recovery, we said quantitative easing number 3 was the test was a substantial improvement in the outlook for the labor market. Well, what does that mean? Well, it means a substantial improvement in the outlook for the labor market. It meant we would communicate when we thought we had that. This is just like that, in a way. What we're saying is substantial further progress toward our goals. We'll tell people when we think, until we give us a signal, you can assume we're not there yet. And as we approach it, well in advance, we will give a signal that, yes, we're on a path to possibly achieve that, to consider tapering. So that's how we're planning to handle it. It's not different really from QE3. And I think what we've learned from the experience of these last dozen years is to communicate very carefully, very clearly, well in advance, and then follow through with your communications. In this case, it's an outcome-based set of guidance, as our rate guidance is, and it's going to depend on the progress of the economy. That's why it's not appropriate to start pointing at dates yet.
Shepard Smith here. Thanks for watching CNBC on YouTube.